So as you're probably aware, a couple days ago, on the 23rd of October, the Counter-Strike market crashed. Probably the biggest crash in the history of the skin market in the last 7 to 8 years at least, right? When it was larger in market cap. And a lot of people are still freaking out. A lot of people think it's still going to go down in a few days when, those 7-day trade-up bans are gone. But I'm here to tell you that, well, it's just my opinion. It's probably not going to go back down. The best time to buy was a few days ago. The second best time to buy is right now.
If price was once at $1,000 and now I can buy $100, oh my god, it's the best deal. In 7 days' time, when everyone's traded their knives. Good.
I mean, if you're listening to this fucking goofballs market analysis, it's natural selection. You don't deserve to make any money anyway. Now, it's not his fault though, right? This is how markets work. This is how price action works in the event of a stock market crash or a market crash, right? Counter-Strike's not the stock market. It doesn't follow it one-to-one, but it is a market. Not only is it a market, it's a huge market, and it's backed by Valve, but serious gambling money. They're not just going to let this market go down to zero if they have anything to do or say about it. Now let's do a goofy fucking drawing like that guy on that YouTube video did, but we're going to explain why it's going to go like this and actually use principles that markets abide by typically when crashes and things like this happen. So we have our market, yada, yada, yada. It's moving sideways, pretty much up and down, fluctuations 1 to 2% per day. And then boom, minus 50%. Why does this happen, right? So we have our update. That's the catalyst. Now these people are fine, right? Because they're pretty much selling on a normal market day in those first 5 minutes. No one's really noticed yet. The buy orders are still high. People are getting out with basically their full amount of money. So these people are justified in selling, right? They're just reacting to market news. They don't know how anyone else is going to react, but they might think it's going to go down. Now, the next 10 to 15% of people are going to sell right here. These people take out their money, put it into something safer. These are your risk-averse people. But what happens is that these risk-averse people send out fucking warning alarms to everyone else because now everyone else sees a fucking huge drop, and these people are your panic sellers. Now, these are not whales. These are people with $1,000 inventories, $2,000 inventories, and they lose always because these people are panicking. They think the market's going to go all the way down to zero, and this is how they get fucking burnt in the market. Right? If the market actually died, if there was an actual market crash to zero, there would be no buy orders. There would be zero upward pressure. The price would go down to zero. But the fact that there is market pressure tells us that, hey, there's people willing and able to buy right now. That should be at least a warning signal in your head that, hey, maybe I should sell for a 50% loss because people are willing to buy right now. Now, a lot of people are talking about October 30th, that when those knives that were traded up towards, become tradable and people are going to start selling them like crazy. Sure, but we were at 6 billion market cap. At the low, we were at 3 billion, right? It's a loss net of negative $3 billion. Now, some of that definitely left the market, right? These people right here that I was talking about, your risk-averse people, they took their money out, they're gone, they left the market. They're not going to come back for a year. They lost trust in Valve, etc., whatever it may be. They took their money out, they're good. October 30th hits, right? Got this chart right here. These are the number of coverts sold in the first day, right? We have all these goals right here. There's a ton of thousands and thousands of them. And from this data, we can extrapolate how many knives were open, right? You just divide by 5 for each one. We can even be liberal in our estimation and say that 50% of them were turned into knives. That may seem like a lot of knives. It's not. And it's probably more like 30% of these reds were turned into knives, right? Because if you look at the data of any red skin, 2 hours in, we were up 500% on the price. So for the first hour, were people making pure profit off of knife trade-ups. After that, it was done, right? All the trading websites shut down. Steam market was all the way up. CSFLOAT was all the way up. You were not getting a good deal on reds in 2 hours. The market adjusted pretty quickly, and as time goes on, as more money comes back in, we're seeing the prices go up even more now. So your chance to get a pure profit trade up is now completely null and void. So October 30th is going to be the only day in which an influx of knives are coming in. After that, it's going to be like just case openings. Like you're going to have a normal amount of knives coming into the supply every day. So this is like a very brief supply shock. Keep in mind, I just made a video about this. Trade ups changed. So not only are we going to have an influx of knives, the knives are going to be shit, right? They're going to be battle scarred. They're going to be well worn, field tested. No one knew about the new trade up system. So while everyone was doing these trade ups with profit trade ups, but they were getting like battle scarred knives, unless you were getting lucky and getting like a fade or a Doppler, whatever, that's going to happen. But the influx of these knives that are coming in are going to be like, no, shit fucking knives that no one wants. The majority of the transfer value is going to go from like these knives, low tier knives, into low tier coverts. That's pretty much the only transfer value that's going to happen. Now this negative $3 billion, right? Like I said, 1 billion is probably going to leave the market. That's fine. But even that 1 billion and the other 2 billion that I think is going to come back into the market, this shit's all right now in escrow, right? People sell their shit on like CS2, and with the new trade revert update, you don't get your money immediately. So there's $3 billion fucking dollars in escrow right now sitting there that people cannot use or take out right now. Now, why does that bode well for the market? Because on October 30th, we have people raring to go, waiting for this supposed crash that's going to happen. It's not going to fucking happen, because as soon as that 3 a.m. clock hits, that's when it is for me, you're going to see like a 2% drop, and it's going to get fucking swallowed up by this escrow money. People waiting to go. And once people see this, people that sold all the way down here, they're going to buy right the fuck back in at a higher price. And it, that's a feedback loop. We're going to recover at least 70%, not all the way back up to the previous high. That's going to take a little while, a couple of months. But in the short, medium term, we're going to go back up like 70%, like fucking guaranteed. I know I compare this to the stock market, and I know Counter-Strike is not the stock market. You're right, but to my point, it's actually more of a positive thing than it is a negative one in terms of this market, right? Because CS is like 50% kind of mirrors the stock market, but 50% kind of mirrors a casino. Shit, right? You still do trade ups even if it costs $300 and you win $100 most of the time, because on that off chance you fucking get a butterfly knife fucking ruby and win 10 grand. So that actually bodes well for the CS market, right? Because it's a casino, people are gonna buy back into it just because it's a fucking casino. About like market sentiment, right? People don't trust Valve. That's completely fair and justified, right? They took this sacred market that the people created themselves, and they fucked with it. They stuck their hand in there, got involved for no reason, and completely destroyed the market. This happens in every fucking market. Go to crypto, buy a fucking meme coin, you're gonna lose your money, you're gonna get rug pulled. Simple as. In 2021, when people were squeezing GameStop stock, Robinhood shut down the fucking stock market for like 45 minutes. Like a normal, retail investor could not buy or sell the fucking stock. They shut it down. I mean, they faced extreme backlash. Their stock got shorted for a few years. But now in 2025, no one gives a fuck that they did this. And they're in the S&P 500 as of like 2 months ago. So people forget, sentiment goes back to normal after a while. This is not something to be worried about. Now, like I said, CS mirrors the stock market. It's like 50% stock market, 50% casino. But it still is 50% stock market, right? So we can like look at price action, fucking market dynamics, and how people react to stock crashes, right? So the same way, like I explained it earlier, you have some people, you have your risk averse people up here, then you have your panic sellers down here, and you have like the insiders and like, people that are on top of their shit that sell up here and get off scot-free, right? But this is pure panic. This is not even justified. Maybe the correction should have been like somewhere down here, But like for 80% of sellers, they're just completely fucking losing money, and they only leave the market because other people are leaving the market, right? Even if they believe in this certain stock or in this certain crypto, whatever it may be. But it also tells us how people act afterwards, right? Now, if people just acted rationally after this, they would not buy back in until the stock goes lower. But that doesn't happen, right? You have other people in the market that have liquid cash, and they're buying right here at this low point. And then you start to see recoveries, right? We're still trending upwards again. Now, people that sold here are going to buy back in right here, losing money, whatever. That money gets transferred to the people up here. The fact of the matter is, it recovers. It always recovers. If it didn't recover, the stock market was shut down in the 30s after the Great Depression. This is just how fucking markets work. The CS market is no different. Yes, Valve controls it. So what? Robinhood just takes control of the stock market when they fucking feel like it too. If you're worried about market makers fucking playing God, don't fucking invest. Buy bonds and shut the fuck up about it. So looking at it like it's a stock market graph, right? We had our crash. We had a little dead cat bounce. It was rejected, which means it wasn't a fucking dead cat bounce. And then we have some sort of recovery. You know, we're starting to accumulate right now until 10:30. That's the big catalyst day. What's going to happen? Slight crash. We're going to go right back up, and we're going to recover. You missed your opportunity to buy. The lowest prices already passed. If you're super early to the party, you may catch something down here at 3 a.m. on October 30th, but it may not. If it goes lower, it'll go 1 to 2% lower. And if you buy it on like CS2, for example, people are going to see this price action go right back up, and they're taking their shit back, and they're locking their shit in their inventory for 30 days. They don't care. Actually bodes well for the CS economy, because these fucking panic seller idiots can't physically move their assets in and out of their account. Now, I'm not saying put your life savings into this shit. It's fucking Counter-Strike, right? 5% of your assets. If you're worth $1,000, put $50 in it if you can afford to. So if I were you, I would get your ass on the Steam community market, because that's the only place you can buy shit right now and not get your shit reverted, which Valve obviously did on purpose. Buy some fucking knives, buy some cases. It's gonna go up.